Hey everyone, welcome back to Upside Down Data. I wanted to wait a little bit to record this video just to let the dust settle a little bit because so much has been happening in the crypto space. But I want to go ahead and talk about it now because a lot has happened that I think is worth talking about. So I'm going to talk about the good, the bad, and the ugly with what is going on. And of course, a lot of the emphasis will be on the bad and the ugly because that is really what we've been seeing. You know, my heart goes out to anyone who's been impacted by the FTX meltdown, anyone who had funds locked up there who has lost a lot of money. This is a really unbelievably unforgivable thing that has happened. It's completely inexcusable. There's absolutely no excuse for this. We're going to talk a little bit more about this as well. But this is a terrible situation that never should have been able to happen. Heart goes out to anyone who is directly impacted. Well, let's go ahead and start by talking about the good, because believe it or not, there is actually a little bit of good that we can talk about, and then move on to those negative things. So with the good, it actually has nothing to do directly with crypto itself. It really is the CPI print that we just saw. So if you weren't aware, the October inflation print came out this morning, and it actually surprised to the downside. So the headline rate was 7.7, expectation was 7.9, so a 0.2% surprise to the downside. And we also importantly saw that core CPI that strips out food and energy, so the components that tend to be more volatile, core CPI came in at 6.3% year over year versus the expectation of 6.5. So again, a 0.2% surprise to the downside. Because the Fed looks so heavily at core CPI, the fact that a surprise to the downside is a good thing. It means that the market might then think the Fed might slow down the speed of the rate hikes. Maybe they won't actually do a 75 basis point hike again in December. Maybe they'll only do a 50 basis point hike, for example. And that certainly seems to be what the stock market is reacting to. So the Dow Jones is up 2.7% today. NASDAQ is up 5.6% as I record this. S&P 500 is up 4.3% roughly as I record this. So a very, very favorable response for the stock market. And similarly, if we look at the dollar, the DXY is falling precipitously today, kind of starting to really set in new lows into this localized downtrend that it's been in, which again takes pressure off of risk assets. That tends to be bullish for risk assets. And also treasury yields are starting to come down as well. Bonds are starting to catch a bid. Again, reflecting this belief in broader markets. So this is the 5-year. I was just showing you the 2-year. This is the 10-year. A suggestion that the bond market might also start to think that the Fed is nearing the end of its rate hiking cycle, and so therefore bonds are catching a bid at these very high yield levels, up around 4%. And so generally speaking, what we're seeing is some bullish movement in broader markets, in macro markets. So that's probably then why crypto has caught a bounce today. So Bitcoin's up as I record this, over 10% on the day from the open. Pretty remarkable move. And then ETH is up monstrous 20% on the day. So we're catching some big bids in crypto right now off of these lows, and probably because we're seeing the broader environment becoming more bullish, so therefore it allows crypto to catch this bounce. So that is some good news because it means that we're not just going to just continue falling off the cliff that we were falling off, right? Ethereum was down 17% yesterday, and it was down about 15% the day before that. If we go back to Bitcoin, Bitcoin was down about 10% on Tuesday, was down about 15%, 14.3% yesterday. So catching a bounce here is nice. Now, obviously, we need to see that to continue to think that the short-term bleeding is done, but at least this is a good sign that we're not just going to fall off a cliff. But now let's go and switch over to, well, actually, there's one more good thing I did just want to mention. So there was a lot of fear last night into this morning about Tether. And what we saw was USDT, stablecoin, supposed to be pegged to the dollar. It started to depeg this morning, and a lot of people got fearful, thinking that Tether was about to blow up. And Tether is a massive stablecoin. You can see here on CoinMarketCap, the market cap of Tether is on the order of $69 billion. You can imagine the carnage that would have been caused if Tether had actually depegged and gone to zero. Basically, you can kiss crypto goodbye in that scenario. We're going into the deepest, darkest winter you can ever imagine if Tether falls to zero. Now, fortunately, the peg seems to be recovering. Something to watch very closely. So this is good news right now, so far, as I record this, that it seems like the depeg is not continuing. But it is something to watch very closely, because if this were to blow up, that would be very bad. So I think that leads us nicely in then to what's the bad, what's going on in crypto. And then we can kind of lump the bad and the ugly together a little bit, but we'll start off with just the things that are bad and then talk about the more ugly revelations that have come out. So the ugly are things like what's happened to any asset that was heavily related to FTX and Alameda Research, and Alameda Research being the trading firm that was heavily tied into FTX and Sam Bankman-Fried. And Solana took a massive pounding throughout this whole ordeal because of how tightly connected it has been to FTX and Alameda. You know, Sam Bankman-Fried was one of the biggest pushers biggest promoters of Solana. And also, you know, Alameda Research had massive holdings in Solana. Massive dumping happened. You know, yesterday Solana was down 42% in one day. In a single day, Solana dumped 42%. Now it has caught a bid today. It's actually up 24%. A pretty big rebound. But there's some other reasons to be concerned about Solana going forward. A lot of validators or a lot of people staking Solana actually, when all this started, tried to start unstaking their tokens. There's a little bit of delay in Solana from when you start unstaking to when it becomes liquid and you can start moving around and then, you know, presumably selling it. So 800 million in SOL tokens set to be unstaked here very soon. I think some of it's actually already becoming unstaked as I record this. And that could be, if this just gets dumped on the market, that could be very bad for Solana's price. That could really drop Solana's price further. Now, with this bid that Solana's caught, it's possible that some of those people won't just immediately sell who did unstake because maybe they think that this bounce will continue. We don't know. But certainly there's a lot of people who might be looking for the exits. And so that's a concerning sign. What I also wanted to talk about then is where might we think Bitcoin might end up heading from here, right? Where are some targets for this? Because one of the things that's happening, and this leads into the ugly a little bit, is that there's a lot of contagion that's likely to happen from FTX blowing up and Alameda Research blowing up. You know, there were people who loaned to those companies. You know, Alameda Research probably had a lot of creditors, a lot of people who had loaned to them, who now it seems questionable if they're going to be able to repay a lot of those obligations. And there's a lot of people then, a lot of firms who are probably going to be out a lot of money because Alameda Research probably won't be able to pay up, and anyone who would loan to FTX probably also similarly. Not to mention the investors in FTX, who now, some of whom I've seen are basically just writing off the entire investment as having gone to zero. So with that, all that contagion in the crypto space, it's possible that some of those firms who are going to go bust are going to need to sell their assets, are going to need to liquidate positions to try to fill the hole that's been created by FTX and Alameda Research going under. And so that could create a ton of forced selling in assets like Bitcoin. Bitcoin being the biggest, most liquid crypto out there. Probably firms that hold a lot of Bitcoin, they might be forced to liquidate their positions. We're seeing this short-term bounce, and you know, if broader markets continue to rally like they have been, that could provide some short-term relief. But I do think it's very important right now just to have in mind what the downside targets could be if that contagion really comes to fruition and a lot of forced selling comes in the market in coming weeks or even months, as other firms, you know, might end up going bust from exposure to FTX Alameda. So let's talk about what those targets might end up being. So I like to look on chain to get an idea of where things might go. And we've talked about this before quite a bit on this channel, in fact, of where on chain we might expect some support to arrive. And really when we look at this, so what I'm showing you here is the realized price distribution across dollar values, and then broken down by how old the coins are, how long the coins have been held. And so essentially this is the cost basis. So realized price is basically when I spend a coin and someone else acquires it from me, then that becomes the realized price of that token. And so that is basically the cost basis of the person who acquired it. So this is a distribution of cost bases across the Bitcoin network. So obviously there's a ton of cost basis that's stuck in loss. Some of it very deep loss over here that's now getting older and older and older. People who are just content to hold, they haven't capitulated out of the market. But if we're looking at where we're going right now, you know, currently we're trading at around 17K. So, you know, kind of in this general ballpark here. You see there was a bit of a blip at around 16.5K, another blip at around 14K. But really you need to go all the way down to around 12K before you start seeing a big wall of cost basis. And the reason this is important is that cost basis can oftentimes be a signal of where support might be. You know, when you get back to someone's cost basis, they might step in to defend it. They might see it as value. They might just not want to let the price fall further. And if they have capital to deploy, they might deploy there. There's reasons why cost basis can act as support, because it's something that it's a price level that's meaningful to people. We know it's meaningful to a decent group of people. And right now we're kind of in no man's land, more or less, right here. And so that makes me think that from this perspective, the more likely scenario here is a movement back down to this direction. Because one of the things that's going to happen is we get back up into these 1920Ks where there are a lot of kind of shorter term holders, you know, for example, 3 months to a little bit longer, who are sitting in this range. They might take that as an opportunity to de-risk. They just get out at their cost basis. So we might be in an annoying situation now where there's a lot of resistance we'll encounter back where we literally just were up in this range, you know, trying to break back up into it from the underside. Might be a lot of selling that we run into as people try to get out because of fears of contagion from FTX and further downside, etc. And then that might end up ultimately leading us to gravitate towards these levels down here, all the way down to, you know, 12K. You know, maybe we don't go all the way down to that exactly, you know, maybe it's 14K, maybe it's 13K, but this general ballpark might be gravitated towards us. And there's another perspective we can look at that would tell us a somewhat similar story. Oops. So I've talked about this before as well. So I'm showing you here the long-term holder cost basis across time. And one of the things that we've noted in prior bear markets is that you oftentimes will see a capitulation deep below the long-term holder realized price. So the long-term holder realized price is people who generally defined as 155 days of holding Bitcoin and older, and it's their cost basis basically. So it's the average cost basis of all long-term holders in the Bitcoin network. And so what you often see in bear market bottoms is a breakdown notably below the long-term holder realized price, and that ultimately then is the bottom. We've seen that happen twice. And then if we look at what's going on right now, we can see that we had just been kind of trading more or less along or around long-term holder realized price, and now we've definitively broken below it. And so if we just think about what we've seen in the past, so in 2015 and 2018 in terms of the drawdown below the long-term holder realized price, and think about where that we might go today to have to kind of reach a similar drawdown. I did the math. In 2015, we dropped about 42% below the long-term holder realized price in that capitulation. If we were to do that again, that would take us all the way down to 12.1K roughly. So interesting confluence between that and where on-chain support is. So if we were to have a drawdown below the long-term holder realized price similar to 2015, it would take us down to around 12K. We saw one similar to 2018 though. That was only a drawdown about 28%. That would actually be about 15K, which actually interestingly is roughly where we ended up bouncing here, about 15.5K. So from this perspective then, if we do the same thing that we've done in prior bear markets, and of course there's no guarantee that that's going to happen because, you know, it's only a sample size of 2. There's nothing to tell us that that has to be meaningful. But just as an interesting kind of thought experiment, if we were to do something similar to prior bear market bottoms in this kind of final capitulation below long-term holder realized price, it's possible that this was deep enough of a capitulation to kind of be similar, because again, it roughly was the same as the 2018 capitulation. But we could have considerable more downside to go if something like 2015 plays out again. And so in terms of just what's realistic, just from what we've seen in those two scenarios in the past, further downside is certainly possible from here. And again, the more extreme case, if we're to do what we did back in 2015, would be around that 12K level. Excuse me. So a final thing I wanted to talk about with this, though, that I think is really interesting. There's another point of confluence with that, you know, roughly 12, 13K range. I put a video out back in early October where I built a quantitative model predicting the price of Bitcoin from the DXY, so what the dollar was doing, and time, and then accounting for how the relation between Bitcoin and DXY has changed over time. And so the idea here is that DXY tends to be correlated with crypto. When the dollar is doing well, crypto tends to do poorly. When the dollar does poorly, crypto tends to do well. So the dollar has, generally speaking, been doing very well recently. You know, if we go back and look, the dollar has, generally speaking, been rallying like crazy. And even, you know, since I recorded that video, it's been kind of more or less flat in that time, but certainly been rallying like crazy up until that point. And so I want to play a clip from this video here where I just am talking about what the fair value for Bitcoin might be based on this model, might see some confluence here. So let's talk a little bit about where then it actually sees Bitcoin's price being right now, what its fair value is. So I'm going to show you this table, and we're going to look at a few things here. So the first thing I'm showing you just is, at the current DXY level and at, the current date, what does it think Bitcoin's fair value should be? And it thinks that Bitcoin's fair value right now, based on what the DXY is doing, based on where the DXY is actually just below 13K. Okay, so there's some additional confluence also. And so it's interesting that this is playing out this way, because this model also predicted that Bitcoin was actually overvalued at this point, and that some movement to the downside might be reasonable for it to get back to where it thought its fair value might be. So again, we haven't gotten there yet, right? And there's no there's no guarantee that we ever have to get down that far, right? It is possible that this would act as the bottom, but I certainly am not going to go on record saying that this is the bottom in any sense. I think there's so much possible contagion from this FTX debacle that we have to be very wary of what the downside risks are. And I think that there's a lot of reason to believe that these levels could come into play. Maybe not immediately, right? We might not go there in a straight line. We could have some temporary relief because of broader macro conditions getting more bullish. But I think that as bodies float to the surface, as the contagion, as the fallout from this really plays out, we can't ignore the possibility that new lows could come. So I think caution is very much warranted. So now I'm going to start talking about some of the more ugly things and more directly related just to what's going on with FTX. So one of the things that was interesting a little bit earlier today was that SPF, Sam Bankman-Fried, put out this long Twitter thread, basically apologizing for things that happened, tried to give some updates about what's going on. It's awfully hard for me to believe anything that SPF says right now because of how much he lied just to the entire space for so long. And then as this crisis was unfolding, directly lying about how FTX was fine, nothing to worry about, consumer funds were safe. Claiming that they never did anything improper with consumer funds, which now seems highly unlikely. In fact, there's some additional reporting I want to talk about in a minute that suggests that they very much were doing inappropriate things with customer funds. And so the one thing I did just want to mention from this thread was that SPF does claim at the very least that they're in talks. They're trying to raise funds basically to try to bail out depositors, the customers of FTX, to make them whole. Again, it's hard for me to just take that at face value. I don't know. First of all, you don't even know if those talks are happening. If they are happening, you don't know exactly what they look like. You have no idea how likely they are to actually come through or to work. I mean, to his credit, at least he does say that he's not making any guarantees. But again, I'll believe it when I see it, when that plays out. But I think the real thing that's going to be talked about here is that it seems clear now, or it's becoming clearer and clearer. Now it's not, official, so take it with a grain of salt that is deserved. There's still some speculation here, but it seems increasingly likely that FTX was actually engaged in some illegal activity here by using FTX funds, basically giving it out to Alameda Research for them to speculate on it and take a bunch of risk, with it. And there's been some new reporting. So this is on CoinDesk that back in, I believe it was May. FTX had sent $4 billion in funds to Alameda Research, and it's believed that at least a chunk of these funds were customer funds, customer deposits, which absolutely should not happen ever in an exchange. An exchange should never be doing anything with consumer funds. They should just be custodying it. All they should be doing is just making money from fees from trading. They should never be sending out those customer funds to other places, especially not a hedge fund, a trading firm that takes on excessive risk and more likely than not lost a lot of this money, which probably then led to this insolvency that FTX is facing. And one of the other ugly things that's likely to come from this is regulations. The SEC has opened a probe into FTX, but this is probably only the beginning. That I think now there's going to be a lot of damage done to the reputation of the crypto space in Washington and with other governments. How it's so much harder to take the crypto industry seriously now when one of the biggest exchanges in the world just completely blows up, and there seemed to have been pretty egregious fraud going on behind the scenes that led to this situation. it's hard to believe that any regulator can look at that and not think that more needs to be done. Now, obviously with regulation, it really depends what the regulation coming out of it is. I think the fear and where things could get especially ugly is if regulators take this as an excuse to just maul crypto, to just kill it, to act in bad faith and just put such regulations on it that it makes it impossible for the industry to survive. That's obviously the most ugly possibility. Now, there is a chance that the regulations could be more done in good faith and frankly maybe could have some positive benefits, right? I think most people would agree, not everyone, but most people would agree that one of the things that was very much lacking here and maybe would have saved us from this debacle was transparency. If FTX would have had to prove that they had the reserves, that they had, that consumer funds were actually safe, that they weren't doing anything inappropriate with them. Proof of reserves is actually something that Binance announced they're going to start doing. Some other exchanges already do this. If regulations were to come into place saying that that's a requirement, I actually think that would be a good thing, right? I think it would be good if we'd be able to have more transparency in what's going on with these centralized entities. Because it's just one more case that we've already seen where a centralized entity blowing up has hurt the entire crypto space. When Three Arrows Capital blew up, centralized entities, and Celsius, that was what caused this big capitulation. It was a centralized entity. And it's notable that a lot of the decentralized protocols, your Aves, your Compounds, your Curves, they're doing fine still. They're not blowing up. They're just kind of humming along, doing what they're supposed to do. And again, with DeFi, you can't do this kind of shady backdoor dealing because everything is exposed on chain. If anything suspicious starts happening, people can immediately see it. And so it's just so unfortunate that in a space that's supposed to be all about decentralization, we just keep on getting wrecked, keep on getting hurt by these massive, hyper-powerful, centralized entities like FTX. Very unfortunate. And so my kind of look to the future, my outlook onto the future, is that, with the CPI print, I think there could be some possible short-term upside, etc. But if we're thinking more long-term here about the fallout, this is going to take a while to play out. Alameda Research is going to wind down. That was actually something that SBF announced in that Twitter thread. There's going to be a lot of fallout from that, a lot of, creditors who probably are not going to be made whole from that whole debacle, and that could then lead to all further contagion. That's just going to take a long time to play out. So if we're thinking about where crypto's going from here, the possibility of us getting back to all-time highs is nowhere near. It's going to take a while for this to play out, and then for a while for any kind of institution to feel like they're willing to put money back into this, because a lot of institutions got absolutely burned by FTX, both indirectly just by what happened to the crypto space because of this, and also directly those who actually had invested in FTX. So that's going to be a problem. And so I think at best, what we can hope for is a bear market, is something like we saw at 2015, where, if it ends up being the case, somehow that we are either at the bottom or near the bottom, that we're just going to be chopping sideways for a long time before any meaningful upside comes. But it's also possible that we're only at a place like this, and that another leg down is going to come from the fallout of all this contagion. That's a possibility we cannot ignore. So anyone who's going out there proclaiming that this is the bottom and now we're going to start rallying, etc., I don't know what they're thinking. I don't know what they're looking at. I see no realistic path for that, just because of how much damage the crypto spaces has just encountered. You're not going to get that massive FOMO into a space that just had such a massive blowout here. It's going to take time for these wounds to heal. And we just have to hope that, there isn't going to be, for example, regulation that is in bad faith, that is intended to kill crypto, that comes in the meantime, that really just hamstrings any possibility of, future bull runs as explosive as we've seen in the past. So I'm not trying to spread FUD here. I'm not trying to create panic or anything like that. I'm just trying to be realistic. And this is just the way that I see it, right? That with this blow up, things have changed. I was starting to get cautiously optimistic that we could at least see some short-term upside back in here. And there were some altcoins that were showing some signs of life. Then, of course, just as we started seeing light at the end of the tunnel, then this black swan event comes, and it changed the ballgame. It's new data that changes the outlook. And I think in crypto, it's important to be flexible in your mindset. There's a lot of people I see who, have been kind of perma bulls throughout this point, who are still unwilling to change their bias on crypto Twitter. I don't think that's going to go well for them personally. So not financial advice. You should obviously form your own opinions. If you're bullish here, you think we're going to go to the moon, more power to you. I just personally don't see that as a realistic path forward. I think at the very best we can hope for is sideways chop from here for a while, maybe some short-term bear market rallies, but that's, I think, the best we're going to hope for. And for any meaningful upside to come, I think the damage to the crypto space reputation is going to need to get healed, and that's probably just going to take time. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there.